You were listening to ChartingWealth.com for Wednesday, the 21st of June, 2017. We see stocks and gold are down. TLT, that's the 20-year bond fund, is up. Let's jump right into the S&P 500, down for the day, 0.66%. We can see that blue line, that is the price percent oscillator, trying its best to pull below the signal line. We still, though, have a green derivative oscillator. Those are not comfortable feelings for anyone looking at a long-term chart at this point. Still have a green up candle also for the week. So again, the market is trying its best, it appears, to top out and move down, but we don't have a clear signal on the S&P 500 to jump into something yet. Two-day chart is rotating over, going down, it appears, at the close of this candle. We'll see over the next 2 days how that actually bears out. When we look at the 4-hour chart, we see that it's continuing to go down. And again, we would, of course, want a pullback going up and then a rotation back over going down before jumping into a down move. Movement is still above the weekly trend line. So again, continue to watch, pay attention, and we will see what we will see. Again, looks like the market's trying its best to top out on the S&P 500 as depicted by SPY. Let's go now to the Qs, down 0.79% for the day. Remember, we had that weekly vertical crossover for the week ending the 16th of June. We had that 2-day vertical crossover beforehand. We do see the derivative oscillator heating up significantly. We talked about that yesterday. Now that latest 2-day candle has been drawn. We'll get to the 2-day candles in just a minute, but we really see the derivative oscillator heating up and the PPO price percent oscillator starting to move down. We have what looks like a spinning top so far for the first 2 days from that weekly candle just getting drawn. We look at the 2-day chart, we can see we had 3 strong 2-day candles. This latest one is a spinning top. Derivative oscillator still spinning, still gaining energy. That spinning top, of course, means indecision. We can tell that the derivative oscillator, or rather the price percent oscillator, is not going down as strongly as it was, but still going down significantly. Price movement is below the 2-day trend line. As we pull into that and take a look, check out what's going on with the start, what appeared to be a crossover pullback when we ended the market over the course of Monday rather, but what we saw happen on Tuesday is the market opened, moved down, and then down further in the afternoon, but we continue to see the derivative oscillator gain energy, and we're just totally flat on the price percent oscillator. So we'll continue to watch. If you do want to look at getting into a practice move, the price movement is below the 2-day trend line. If the market opens and after 10:30 you start seeing down movement and it's confirmed when that 4-hour candle closes at noon, you can sure look to jump into a down move based on the 4-hour candle, because if it crosses back over going down after hitting the line like that, the 2-day candle is confirmed down, and our 2-day chart is confirmed down on the PPO, and our weekly chart's confirmed down on the PPO, along with a derivative oscillator. You can sure look to get into that move. So check the charts out tomorrow morning, see how things are looking about 10:30, and then be ready to take action around 2 in the afternoon if those down moves are confirmed on that 4-hour chart. We shall wait and see what we see. Maybe the market's topping out and going to be moving down considerably. Again, it tried to do that on us on the weekly chart back on the 13th, the week ending the 13th of April. Then, of course, back at the end of April on the 28th, it moved back up again. So we'll just see what's going on this chart. But we do have confirmed 2-day and weekly down moves. We'll continue to follow what's going on the Qs. Next, we go to TLT. It's the only only ETF we follow that was up for the day, up 0.88%, quite considerably. Remember, we had a weekly vertical crossover going up all the way back on the 3rd of February. We had our 2-day crossover going up on the 19th of May. And as we look at our 2-day chart, we can see that things are continuing to boom. We're well above our 2-day trend line and our weekly trend line. Derivative oscillators gaining energy, and the PPO is actually cranking higher up. When we look at our 4-hour chart, we of course continue to see up movement on that 4-hour chart. So things are looking nice in that ongoing TLT trade. So continue to watch, pay attention, and see where that leads us. It should be inversely related to stocks going down. The bonds should be going up. They are, and that is what we would expect. So continue to watch that, play with it, and let's see how long we can ride that train. Now, we will go back to the weekly chart, and lastly, take a look at gold. Gold does appear to be crossing over, going down. Again, we won't confirm that on the weekly chart until we have a weekly vertical crossover. And remember, you don't have weekly vertical crossovers until the week ends. That happens on Friday. We've seen what we see right now plenty of times, and by the end of the week, if there's considerable up movement, it can pull the PPO back over. So again, it ain't over till the candle closes. Now, we do see strong down movement on the candle so far this week on the weekly chart. We look at the 2-day chart. Of course, it crossed over going down back on the 16th. We continue to see down movement there, strengthening on the 2-day chart. And as we look at the 4-hour chart, of course, that is our prescient chart. That's the chart that we particularly like to trade off of. It's nice when everything's moving in concert, and we continue ever since things crossed over in the afternoon of the 8th. We have seen 8th of June, we've continued to see a couple of pop-ups along the way, but considerable down movement continuing. So again, let's watch gold. Trade gold, see how gold continues to do for us. Remember, in these down moves, those of you who haven't listened to us very long, people wonder, wait a minute, how do you make money when gold's going down? Well, there's something called DGZ. It is the gold short ETF. It goes up when gold goes down. That is exactly how you do that in your practice trades. So again, we have inverse funds on all of our major funds. Our inverse fund for the Qs, the NASDAQ 100, is PSQ, and there are other options also. We just found the easiest ones. There is the short for the S&P 500 SH. Of course, gold we just went over, and TBF, Tango Bravo Foxtrot, for the 20-year bond fund. So again, we've got the ability to trade and invest when the market's going up or down. Remember, we just have a sounds simple binary decision to make. That is, do we get in or do we not? Really 3 decisions. Do we get in? Do we get out? Do we stay? And we'll continue to work on these each and every day. If you've not already signed up for our daily market reviews, you need to do that. We'll send this information to you every day. Simply go to chartingwealth.com, put in your first name, your email address. We'll put you on that list, and we'll start providing you with the information. We should be putting on the finishing touches for our S&P quarterly training here for all of you who signed up for that. The list is now closed. That'll be going out in the next couple of days. We'll be getting that to you. This, of course, is a chart that we are extremely proud of. We'll see about offering this again, but those of you who are financial advisors or your long-term investors, when you look at our quarterly chart, it is absolutely beautiful. This chart that we have that we're doing the training on coming up is just amazing. You get in and get out when we have those quarterly crossovers. You would have gotten out of the big drop starting in 2001 through 2003. You would have gotten in and ridden it up in 2004 to 2008, would have gotten out before that big drop and would have jumped back in right there at the end of 2010, 2011 for this latest run-up. It is beautiful. We're going to explain that chart to all of our valued listeners who signed up for that about a week and a half ago. If you have not received a rejection, for those of you who signed up, you have been accepted, and you will be receiving that soon. Thank you so much, my friends. We love to hear from you. Write us cw@chartingwealth.com. We're happy to try to help you in every way we can. Lots of good training under the training section at the website, chartingwealth.com. And again, sign up for our daily market review. With that, you get our How to Read a Stock Chart video. You also get the layout that we use at freestockcharts.com. Plus, you get our daily market worksheet, our weekly market worksheet, and our trade sheet, which is what you fill out when you do your practice trades. Because, folks, if you're not practice trading, you're just missing about 90% of what we're doing. If you don't practice it, you're never going to learn it. Okay? I say that in martial arts to people all the time when I'm training. If your body's never gone there, your mind cannot go. And in the market, if you're not out there practice trading, you're never going to get the concepts you've got to get. That is the fear. That is the exaltation. That is the greed that can kick in. The stupid things that you learn only by practicing. And how do you get to Carnegie Hall? Practice. How do you get to be a master trader, investor? Practice. Practice with us every day. We're not a stock calling service. We're an education firm, and we want you to practice with us. We also appreciate all your feedback, because in life, everyone should be learning every day in every way. God bless. All the best from chartingwealth.com.